Hello everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Wednesday the 2nd of November. It is the FOMC day, so markets are very much keyed up for this one. I'm going to be looking at euro dollar for Forex charts. I'm looking at the gold chart and also SP500 futures. So straight into it with this euro chart, seeing where it's at. We've got this uptrend that we've been in play since the end of September, really, higher lows and higher highs, but it's just been dragged back. And I've been talking recently about this breakout area of 99 big figure up towards 1 big figure, which is parity. And the breakout above that was important, was encouraging, but it's now just been dragged back through that. We've seen one strong negative candle, a big doji, and then another negative candle, and then a disappointment of yesterday's move where we saw the intraday move higher and then just selling off into the close. So it really is, I think, I've said previously that a closing underneath 99 big figure would suggest that the market is rolling over. I mean, already we're seeing these sort of moving averages turning back lower again. The RSI is at 50, so it's not yet sort of turning decisively negative, but I just think that the intent that the market had with the breakout has been just completely lost now. We've got the FOMC meeting today. How the market responds to the Fed tonight will be crucial, obviously, but it just tells me that the market isn't ready to really push on for a recovery, and that closing underneath 99 big figure again for a second consecutive session just really sort of leaves me a little bit unimpressed with this breakout, and it just looks as though the likelihood is it's going to come back and test this uptrend again. Testing this uptrend doesn't necessarily mean it's going to be breaking down. Obviously, the uptrend of higher lows is in place, but it just looks as though it's just sort of losing its way again. You see on the 4-hour chart, we've sort of moved underneath 50, and that's now a basis of resistance in the last couple of peaks higher. So it just looks as though this market is just sort of turning over. It's going to be coming back to test that uptrend. Let's get that crosshair on the support. You've got that support line 98.50. Breaking underneath that, you really would, I think, suggest that you're coming back to test that uptrend again. That key reaction low, that higher low, comes in at just around 97 figure. So watching out for that. But obviously the key near-term resistance at 99.60 from yesterday's reaction high, back above parity, would obviously engage the bulls again, but I just think it's a struggle now. I think a test of the uptrend could be seen. Looking at the gold chart, I think, again, a consistent run low. You've got the downtrend in play. You've got the failure underneath the 1680 old support. Old support becomes new resistance, and we've got that as a pivot line, 1680. Also, that now pretty much takes on board the downtrend as well. So failing at that last week was a disappointment. Coming back, a little bit of a tick higher yesterday. Yeah, is it a bullish? It is actually a bullish engulfing candle, but again, it's not decisive, and I wouldn't be saying that that's going to be going higher. My assessment of that is still selling into strength. I think you've got this overhead resistance that comes in sort of 1650 up towards 1670 area. I think that is still an issue. We've got the downtrend that's an issue, and I think that being underneath 50 on the RSI is again a chart that suggests selling into strength, probably testing the lows again. You'd be saying the lows come in at 1617 towards 1615, and they are the key lows you're coming in there. So it just looks like a chart that is sort of coming back towards a test of those lows for me. Let's have a look at the 4-hour chart. It's a little bit messy on the 4-hour chart, nothing too decisive on that. You've got this RSI that sort of got back to low 30s, but then previously it was up in the mid 60s, high 60s. So it's sort of a little bit choppy near term. You can see that reflected in the moves actually in the last sort of week or so. Moving averages also sort of around the flat line as well. But just for me, the failure underneath resistance, underneath the downtrend, suggests it's coming back to test the support. And finally, S&P futures, well, the big run higher, strong bull run into resistance. This is the key. This resistance band you had between sort of 38.20 up towards 38.85 area. You've got the reaction high of the last two out of the last 3 sessions have seen a reaction high just underneath that resistance at around 38.75 area, 38.80. Falling over, testing that uptrend now. You got the momentum, which is positive, still above 50, so that's encouraging. but it needs to hold that uptrend. 2 negative candles in a row is a little bit concerning. Tick higher today, just a consolidation really ahead of the Fed. I think on the Federal Reserve, if the Fed is in any way sort of starts to hint at a pivot, I think that's going to send equity markets higher. That's going to be positive for S&P futures and break out then above the 38.85 level. Above that, you sort of zoom out, you've got this primary downtrend. That really is the case. These rallies, this rally here was around about 12%. This rally here, 17%. This rally here currently around 12%. So back towards this old downtrend, that would be around about that sort of 17% area. So the size of rally that we saw back in June, July time. So that's what you'd be looking at. But just for now, just looking at this as dependent on the Fed really, back underneath this reaction low of 37.57, that would be the key breakdown. So I wish you good luck in your trading. Thank you very much, and I'll speak to you soon.